The halving is just around the corner. At the time of recording, it's just 9 hours and 11 minutes to go. As you can see right here, it's crazy to think about that the last halving is already 4 years ago. I think we all know about the long-term effects of the halving, but in this video, we will also look at potential short-term effects. Apart from that, Bitcoin looks like it could have formed a local bottom. We'll also look at the reasons for that and if this is really worthwhile or if you could still see lower prices. Also, one of the coolest things of a bull market is the alt season, and this is still to come. So we will also have a look at when we could expect it. So without any further ado, let's go. Alright guys, let's have a look at Bitcoin first. Alongside altcoins dumping hard, we had this dump in Bitcoin, and then alongside the news of Iran's drones over Israel, we had this big dump. We took out the first lows here, meaning we took out the liquidity, and then at this point, it kind of looked like this could be a local bottom. This is also something I informed my Telegram members about. By the way, if you're not already in my Telegram group, I advise you to join now. Link is down below. Judging by my subscriber count, there's a lot of members that are missing in the Telegram group. It's free. You get more alpha. You have more recent updates than on my YouTube channel. One of my trading indicators will be for free alongside a mini course that explains it. So join now if you haven't already. So after price showed first strength and a possible local bottom, we got news that Israel might have retaliated against Iran. Then we got this dip. Shortly after that, Iran said they will not retaliate again. And then we got this big pump, because this basically means that the uncertainty phase of this scenario is over. Markets don't like uncertainty. Uncertainty means price will more likely go down than up. And this then explains this whole timeline of this price move. So could this dump be over? Yes, it could, but we have to be realistic. At this point in time, we're still below major moving averages. Especially the golden moving average is very important for that case because it determines the overall trend of Bitcoin and other assets. Just for reference, as you can see here, since October 2023, we basically didn't close below it apart from this correction here just after the Bitcoin spot ETFs were released. And after the new all-time high here had multiple bounces of it. And every time we got a bigger pump to the upside. For the last days, this wasn't the case. We broke below it and also got rejected below the same way we got rejected to the upside. We got rejected to the downside. And right now, we are still being rejected. This means the likelihood for this being a local bottom depends on price closing above these moving averages again. And we could very well see that within one candle, closes above it, and that's it. If that doesn't happen, this increases the chance that we might travel lower, only judging by price action and technical analysis. In my last videos, I told you this might increase the chance of us visiting around $50,000 to $53,000. But as the footprints reversal bands are traveling up here, while Bitcoin is more or less moving sideways, could mean that the local bottom, in case we break down, is not as low as this green box, but instead at the level of the footprints reversal bands. Depends on when we could break down. This could be around 58,000, for example. Why is that important? Because all of the breakdowns we had in this bull trend so far were basically perfectly reversed at the beginning of the first band of the footprints reversal bands, as you can see here, 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 and here in these 4 scenarios. And of course, this might repeat. Although you know how it's going, past performance is not indicative for future results. In trading and investing, nothing is certain. We're always dealing with likelihoods. One very important factor for Bitcoin moving, and with it the whole crypto market, is, for this cycle at least, the net Bitcoin ETF flows. Meaning the money that comes into the crypto market through the ETFs, because the ETFs buy real Bitcoin to offer the ETFs to their customers. And as you can see here, we have a graph beautifully showing the daily flows that we had. And since March 13th, the flows are basically flat and moving sideways. And if you compare that to the price chart of Bitcoin, you can see here that March 13th basically perfectly marked the top. And this also shows us that most of this rally was fueled by ETF money. Retail is not really here yet. There's other indications that undermine this, but this chart makes it even more clear and also means potentially that the uptrend in a big fashion will continue after we see the first spike here in total Bitcoin ETF inflows. All right, now let's talk about the halving next. What you can see here is the halvings marked in yellow, and in red we have other big events that sometimes mark the tops. What's pretty obvious, and you all know it, after the halving, price goes up normally. From the halving in 2012, we went up around 9,200%. From the halving in 2016, we went up to the top around 2,600%. And from the halving in 2020, we went up around 640%. So the first thing that's obvious, we have diminishing returns. So let's maybe say we have around 200% to go. This will put us on $210,000 per Bitcoin. I'm not saying this will be the top. I just want to show you the effect of diminishing returns. It's everything. But now let's zoom in a bit and have a look what happened after the halvings in the short term. Just after the halving in 2012, we went sideways for 42 days. And just after that, the big rally started. After the halving in 2016, we actually went down quite a bit. So to the local bottom there, it was 28 days. And then including the sideways range, we were looking at around 90 days. In 2020, we reversed the COVID crash at the time of the halving, but after the halving, we were moving sideways for 70 days. And if we measure to the point where the real parabola started, this was even 140 days. So basically in the last three halvings, the sideways or downwards period after the halving increased over time. Of course, I don't know if it will be the same this time, but of course we have to keep in mind that this is of course a possibility, especially if we don't see any big new inflows of the ETFs or retail coming into the market. Because in the end, of course, something has to drive price. So judging by the price action after the halving 2016, we could see this kind of scenario, dump sideways up. And judging by 2020 and 2012, we could see basically an elongation of this sideways range for a longer time and then go into the upwards parabola. Now, as price-wise, we have a different scenario this time, and that is we're already at the all-time highs. Way before the halving, we could already ditch this and just go up from here. This would repeat basically the 2021 scenario and would mean that we will likely see the top way earlier this year. By the way, a little fun fact about some of the halvings. As you can see here, the 2020 halving meant a block reward of 6.25 Bitcoin. And this is 3 digits, indicating that it was the third halving. And starting from tomorrow, we will have 3.125 new Bitcoin for every block that is mined. This is 4 digits and marks the fourth halving. And we can say the same about the halving in 2028, 5 digits, and will be the fifth halving. Might be a cool thing to point out at the next party. Now, before we have a look at the alt season, let's have a quick look at the stock market. As you can see here, the S&P 500 is nearly touching the golden moving average. This is a very important one. For the whole uptrend between 2020 and 2022, it served as the last line of resort before we continued pumping higher. And the first time we broke it, this started the bear market. So to see more bull action, we better hold it this time as well. If we hold it, this could resume a big uptrend, or of course we could see shallow ups and downs, a sideways range before we continue up or down, we don't know yet. So this will be a little similar to 2018. As you can see here, we held it, we had a little shallow bounce, held it again, and then had a bigger next parabola. Now talking about the Bitcoin dominance, this is the best indicator to see when the alt season might start. Basically, it fully depends on this yellow line. The biggest alt season of all times in 2017 happened after we broke significantly down from this line. Then of course in 2020, the big alt season, and we are yet to reach this yellow line. Although there's not a big gap. Also what's important to notice, we don't have to touch it and then immediately start the alt season. We could of course see something like this. We go to the line, we see a shallow bounce, go to the line again, and then go down. Before seeing the big parabola, this might be a scenario to watch out for. So then when could the alt season end? If past performance can be an indication, this will be right here at the green line. Also, the first touch of it doesn't mean that the alt season has to end right away. In the last alt season, we've seen that we broke up from it, went down below multiple times, before we ultimately ended it. What does this mean in the end? As long as we are accumulating here, this area right here, this is your time to scoop up altcoins. What you scoop up here will likely be at least a 10x if we reach this green line. This will also be the time where many projects do 100x and 1000x. So the altcoin action we've seen already, this was just this part here, this small part. And this is yet to come. I think you get the idea. So don't forget about the long-term picture. Don't forget what is awaiting us most likely. And don't panic even if there's a dump in markets, even if altcoins could go down 40-50%, even if Bitcoin could go down 20-30%. This is one of these charts that remembers us to think long-term and to use prices going down to scale in even more, get even cheaper prices. And I think till the end of this year, probably till the end of next year, that depends on a lot of factors, this could make you pretty happy. Now, if you haven't subscribed to this channel yet, please ask yourself why and do it now. You really don't want to miss any of the next videos. There's a lot to come. Of course, this was not financial advice. Please always do your own research and due diligence. This was Phil Prince for you. Until next time, crush the markets. Goodbye.